Welcome to the chat. Welcome to the chat. The purpose of this tutorial is to show us how to do the top-down analysis using the market structure, demand and supply zones, liquidity zones in conjunction with candlestick patterns. What is the top-down analysis? The top-down analysis is a holistic approach to looking at the market. This analysis allows a trader to view the market from a long-term perspective so as to know where the institutional order flow direction is going. As the common saying goes, the trend is your friend. So, to know the direction of the trend, that is the usefulness of the top-down analysis. So we begin from a longer time frame. Advisably, either as a swing trader, as a day trader, or a scalper, you can come down to the daily time frame to look at the bigger picture. So on USD JPY, we can see that the price currently is in a downtrend. As you can see right here, market did break a strong support level in this zone, and after the market broke this strong support level, you can see market came to retest this zone and the market dropped to make a further lower low, and you can see a correction here and the market made a higher low. The market dropped further to make a lower low. The market made a higher low and the market dropped further. So seeing this, we can conclude that on the daily chart the order flow is bearish. So the market probably would make another correction for a continuation of this downtrend. After moving from the daily, you move to the 4-hour chart to look at a closer look at the market and the direction of the market. Here we can see the market broke a strong support as well. After that, the market created a lower low right here. After creating the lower low, the market made a correction. The market went further to make a lower low. The market made a contraction. The market made a lower low, a correction and a retest of this resistance right here, and the trend continues to the downside. After seeing this, what do? Then we scale to a lower time frame. However, if you are a swing trader, on the 4-hour you can look out for opportunities. Let us look for opportunities that the market is likely to give us. Right here you can see a bearish engulfing. Here is an accumulation at the opening of the ancient session. We can now see a sell candle that engulfs and breaks this bearish candle, and then we can enter on the retest right here. We can make our entry right here, as we can already conclude that the order flow is bearish. So we can do well to scale in position right here, and if we miss that opportunity, we can go to the lower time frame. That is if you are a day trader. If you are a swing trader, you need to wait for the 4-hour for a pattern to form. Right here on the 1-hour, there is no clear opportunity to scale in, because preferably you should also always try to scale in during the London session, as the London session has the highest liquidity out of all sessions. You can move down to the 30 minutes to look out for zones to enter from. On the 30 minutes, you cannot see no clear opportunity. I do not advise you to go below the 15 minutes. And right here on the 15 minutes, you can see an opportunity to scale in. Here is an engulfing candlestick pattern. You can scale in, entering with a sniper entry, maybe a 10 pip stop loss, and here you can target 1 to 5 within this range. Let us see. So this is an opportunity here. So you can see that is part of the advantages of the top-down analysis. This gives us a perspective into the long-term trend, and we are able to leverage on the long-term trend. On USD card, let us check on the daily time frame. Just zoom out. On the daily time frame, you can see the order flow is bearish. Price made a lower low, a higher low, a lower low, a higher low. Then we can move ahead to the 4-hour chart. If you are a swing trader, to look for bearish opportunities. So let's say last week you have made there's an opportunity here to scale in, as the order flow already is bearish. As a swing trader, there's an opportunity to scale in here. So let's just go to the 1-hour chart to see if we have any entry to scale in. Not much of a clear entry, so we can keep an eye on this pair. Although scalpers are likely to have more opportunities since they leverage on small fluctuations of the market. And as a scalper, let me check the time. At this time of London session, there is an engulfing pattern. Could have scaled in with a sniper entry targeting using a 10 pip stop loss. You could probably target 1 to 5 or 1 to 10. As you can see that the order flow is already bearish. So once the order flow is bearish, we watch out for liquidity zones and other blocks in the bearish direction. So the top-down analysis is very simple. You do not need to complicate it. On USD JPY, let's just take a top-down analysis. You can see the order flow is bearish as you have a confirmed market structure. Market broke this strong resistance right here. Immediately market broke this strong resistance. We have a higher high, we have a lower high, we have a continuation of the trend to the upside. Then we can go to the 4-hour chart. Not much of a clear opportunity. We can go to the 1-hour chart if you're a day trader. The 1-hour chart, there is no clear pattern to enter, so you can look at the low of the day to switch to the 15 minutes if there is any probable entry. On the 15 minutes, there is no clear pattern, so we just wait for price to generate a clear pattern, then you can scale in. So the top down analysis, it is as simple as that. Let us do AUD USD. Okay, AUD is not right here. Let me add it on the chart so we can have a top down analysis on AUD USD. On AUD USD, we can see the trend is bullish. So moving to the lower time frame, on the 4-hour, not much of a clear trend. On the 1-hour, not so much of a clear trend on the 1-hour. Let's go to the 15 minutes. We don't have no clear pattern. I advise you that any pattern you are going to use to scale into the market has to be a strong pattern, because if it is a strong pattern, the likelihood of such pattern working out is high. Here on this day we have a pattern. You could have, as a swing trader, you can enter on the 20 pip stop loss and target 1 to 5, targeting 100 pips. You can see right here we have a strong pattern, an engulfing candle. So once you already know the overall direction, yours is just to switch to the lower time frame. Look out for a strong pattern, a strong candlestick pattern at a liquidity zone. Here we can see liquidity is taken at the low of the day and the trend rallies up. So that is all for the top down analysis. You start from a very higher time frame, look at the order flow and the bigger picture, you scale down and look out for liquidity zones, because we call them demand and supply. They are also liquidity zones because those are the zones where you have the majority of the buyers and sellers that are ready to push the market. So if you find this material useful, please like, subscribe, share and follow for more.